Ladies and gentlemen, welcome back to the channel. Here in today's episode, we're going to be talking Tesla stock specifically, the news that's coming out. But I think more importantly, people want to know, what's the deal with this crash? What's the latest with Trump and China? And what are our thoughts and expectations on what is to come? Okay, now one thing that we can do over this weekend is we can look at crypto and get a little bit of a gauge, I guess, on investor sentiment. It's not perfect. It's not the stock market, but it's something. And it doesn't look terrible. I'll say that, but we will discuss it here in today's episode. Hit that like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of this video if you want to come join the trading community. We are going to benefit from this no matter which way it goes, right? We're going to hedge the downside. We're going to go long on the downside. Just like April, this could be a massive opportunity if you can keep your emotions in check. And, well, if you come join us, hopefully that will help you keep your emotions in check. So with that said, ladies and gentlemen, let's go ahead and get into today's episode. Now, we are going to get into your Tesla stock news, but first, I want to give you the latest on this whole Trump-China situation and what has happened. So, as we talked about yesterday, you already know, right? The 100% tariff on China on top of it's like 50% tariff that's in place on China already. Like, you're talking trade embargo that goes into effect on November 1st. Now, there are some key differences between now and April 2nd. April 2nd, it was not just China, it was everywhere. Okay? So right now, it's just China. Like, things look to be getting better in the EU from a trade perspective. Canada and Mexico, like other major trading partners, are actually, it looks like deals are either done or getting done. But China is by far the most important single country. And unfortunately, like, having a trade embargo with China is going to have dramatic implications for the economy. Even Donald Trump said yesterday that this process could be painful, that this is not going to be an easy process. Okay. And that's what caused a lot of the downside today was the threat of tariffs on China. And then in after hours, the S&P fell another 1% at the lowest point, following the actual announcement of a 100% tariff being put on China by November 1st. Well, you see this here, these green candles, markets slowly started to recover into 8 p.m. Well, Donald Trump said that he's still willing to meet China's president. That seemingly looks like a little bit of an off-ramp to some of the tensions. And that maybe not all hope is lost for, tariffs November 1st. And maybe that ultimately does not happen. And that was why you seen a little bit of the recovery in after hours yesterday. Donald Trump says here, quote, other options could be considered for export controls. So that was really the first headline that got the markets moving upwards again. And then Donald Trump says that he might still have the Xi meeting. Trump says, don't know if he will meet President of China, Xi. So again, it sounded like in the big post that Trump made yesterday that he was not going to meet China's president. Basically, that is that. The time has come where we need to, decouple from China. Like, China's going to have to pay a price. And some of these comments sound like Trump walking it back a little bit. Now, also in the news yesterday, the Trump administration has started doing layoffs that, quote unquote, will be Democrat oriented. So there was thousands of government layoffs yesterday, which again doesn't really help the markets. The big story was obviously Donald Trump. Now, what does this mean going ahead? Okay. Well, it's a bit of a tricky situation. Everyone wants to know, like, hey, are stocks just going to V-shape recovery? Should I, go start buying this dip aggressively? Should I wait a little bit? And the fact of the matter is, it's not just this means that and that means this kind of thing. Okay? For an example, if the Trump China, meeting doesn't happen and the 100% tariffs go into effect on China, that's one thing. Fine. Okay? That can be disruptive for a little while. If they, get removed shortly thereafter, boom, markets are back. Markets are going to love that. And there's not too much damage done in that scenario. Well, if the tariffs go on China and they last for months, you're looking at recession. So it's not like on November 1st, when the 100% tariff goes into effect on November, that it's like, doomsday scenario November 2nd, right? That's not how it works. It's more based on time, okay? And the longer time goes on, the more destructive it will be. The harder it will be to avoid the negative consequences of that. Now, in the short term, you're probably going to see a lot of companies that start to over-order like they did the first time around. And what kind of inflation implications could we have from this? Hard to say, but there could be some, at least in the short term. Higher tariffs partially get passed on to consumers. Not all of it, but as much as companies can, they pass on. I don't think there can be much inflation in this, weaker labor market and weaker consumer-driven economy. But I mean, that's really a topic for a whole different video. Long story short, it's not good from a Fed cutting perspective. But then again, you circle back to how much damage is it going to do to the economy? And the fact of the matter is, we do way too much business with China to just cut that off and be fine. Okay? Now, again, on November 1st, it doesn't mean on November 2nd we're guaranteed to have a recession. But if this lasts 3 months, 6 months, something like that, your odds of a recession dramatically increase. So the markets are going to be very sensitive to headlines on trade with China and these specific tariffs. But again, it's not like right after November 1st, all hope is lost. Okay? From an economics perspective, it's going to take some time for that recession to come, for that, economic fallout to come. So from an equity investor perspective, I think you got to look at this on a risk-reward basis, okay? With stocks as high as they are today, the risk-reward is not ideal if tariffs do go into effect on November 1st, okay? Now, if markets fall 10% from here, then the risk-reward starts to get a little bit better. Like back in April when stocks fell 20% and Trump said, go buy stocks. I mean, that was about as clear cut as it could possibly be that things were about to get better. And I don't think it's going to be that easy this time around. If it is, like, that's your green light signal. But once you're down that much, the risk reward starts to look a lot better. So basically what I'm saying is right now, if the tariffs, go into effect for a couple of days, you'd want to buy the dip right now. If you think the tariffs are going to go into effect on China and last a month or two, you wouldn't want to start buying the dip here. Okay? And that's the hard part. We don't know what Trump is going to plan to do. Is Trump going to taco out? I hate that term. But is he going to not do the tariffs? Are they going to have dialogue and come to an understanding? Okay? You don't know that. But I did start to do some buying on Friday because I think the greatest likelihood is that Trump does not want a recession, that Trump wants good relations with China, that this was probably some kind of lower level misunderstanding or lower level issue, right? It would be like if, you know, one of your lieutenants or field lieutenants or something did something wildly against your policy and you blame the president for it. And then, somebody else blame the president for it. It'd be like, did the president really do that, or did somebody just act out of line, right? So I'm theorizing here, but I'm assuming that China was not trying to nuke U.S.-China relations. I'm assuming that Trump and China can probably get along still, okay? And I'm optimistic that the tariffs November 1st will not go into effect. I don't think Trump wants a recession. I don't think Trump wants to delay rate cuts because of perceived inflation from tariffs. I don't think Trump wants to start a, larger conflict with China. Okay? And I don't think Trump wants the markets to fall another 20%, right? That's not good for his donors that helped him to get elected. That's not good for his economic, policies. That's not good for anything Trump wants to do. Now, before we get into Tesla stock and any of the news today specifically, we're going to look at the option activity for Friday as well. One thing I want to talk about that is very important is how do you respond in this market environment? Okay. I get a lot of questions on this. Like, after a big red day, people are like, should I be buying here or hedging or whatnot? And again, there's really no good answer to this, but I'll tell you what I'm doing. I have a small hedge on my portfolio. It's like nothing, okay? It's a couple $100. I just threw it on because if we were surprised over the weekend, there would be something that could offset the portfolio. It's not going to do anything. I'm basically unhedged, okay? Hundreds of thousands of dollars unhedged, okay? Again, as I just said, I don't think Trump ultimately wants to destroy the economy, cause a recession, or crash the markets. I think in this environment, there can be off-ramps, right? On Sunday, perhaps, we might get a headline that says, Trump and Xi have scheduled a call for Monday morning and blah, blah, blah. And markets are going to take that really well. Now, if you look at Bitcoin right now, which is the best thing that we could look at over a weekend to see kind of where sentiment is, where fear levels are, the high right before the, Trump debacle was about 123,000, 122,000 or so. You went as low as 108,000 just in the course of 10 hours or so, okay? You've bounced back up to about 112,000. So it seems like, again, the damage is done from a certain perspective, but Wall Street's kind of waiting around. Investors are waiting around to see what happens next, okay? And I'm assuming there's going to be an off-ramp at some point. So as long as you're not in a bunch of margin, as long as you're not super over-leveraged, this is an opportunity, okay? Why? Because you can buy stocks at a artificially suppressed level. Now, maybe the markets were overvalued a little bit to begin with, blah, 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 who cares? I think there are very strong forces still at play. AI, very strong force. I think the big beautiful bill into 2026 is going to prove to be pretty good for the consumer, pretty good for the economy. A lot of people have forgotten about the big beautiful bill and some of the positive provisions, like being able to write off the auto loan interest that you pay. No tax on tips, no tax on overtime, 100% capital depreciation, okay, or write-offs, okay. There's big incentives to go out and spend money. But you don't see any of those benefits until 2026 taxes, okay? So about mid-year next year is when you should really start to see some of those impacts being felt, okay, or benefiting people. So you have that. So I think stronger economy, less inflation that goes away, the Fed that is cutting rates, real estate is going to start being able to move again. People are going to be able to sell their homes, buy new homes, take a lot of money to their bank accounts. They're going to have a lot more spending power, okay? None of this China situation or Trump situation with China changes any of that, okay? Again, the question is, how long does it last in the first place? Okay, if it lasts a couple of months, stocks are going to fall 20+%. You need to be prepared for that in the worst case scenario. In a more optimistic scenario, Trump schedules a call with China's president on Sunday. Stocks recover on Monday. By Monday afternoon, Trump is canceling the tariff threat. Okay, and kumbaya, business as usual. There was one bad day, and you were able to take advantage of it or not. Now, a lot of people back in April made the mistake of they didn't read the tea leaves, right? They didn't take Trump serious before April 2nd and then after that he was actually going to come to these trade deals with countries and pause tariffs. When Trump literally said, buy stocks. Like, you should have listened to that. I think people this time around are going to pay more attention to what Trump says. And if it looks like we're going to have an off-ramp to this sooner rather than later, stocks are going to react very positively to this. So back to the main question. Again, what do you do in this environment? Well, it's obviously up to you. You don't want to be in margin because in the worst case scenario, stocks fall 20+%. You get blown up. You lose a lot of money if you're in a lot of margin. A little bit of margin can be okay. A lot of margin, definitely not ideal. And I'm not a financial advisor. I'm not a financial planner, so contact one. But again, I don't think Trump wants a recession. I don't think Trump wants another bear market. I think that is very, much not productive for what Trump is trying to do. What Trump is trying to do is create a strong economy, a good jobs market, onshore, manufacturing capabilities. Trump wants to win in AI. He wants crypto to do very well. All of this is anti-positive for Trump's policies. You have to understand that, okay? He might say he doesn't care, but he cares. I also think Trump wants the record of the best stock market. I think Trump wants a Nobel Peace Prize, okay? That's pretty obvious at this point. Pretty hard to do those things if your country is in shambles and the stock market is crashing. So what does this mean you do? It means on these red days, you have to buy something. You almost have to buy something because you never know when things are going to turn around. But inevitably, just like last time, things are going to turn around. I don't think Trump wants to take it nearly as far as he did the first time around. Okay? But there's a risk that he does. So I actually started to do some buying on Friday. And as we get red days, if we get more of them, you got to start legging into positions. That doesn't mean throwing all of your money at one stock on one day. That means as stocks fall, you can start to leg in more and more and more. For an example, stocks were down, S&P was down 2.8% on Friday. That's a really good start to start buying some more positions. That's why I did some buying. If stocks are down another 2% on Monday, that's another really good position, place to start. If stocks fall 10%, the risk reward starts to look a lot better. If stocks fall 20%, just buy everything, right? But you got to start buying even on these more shallow red days. If you have $10,000 to invest, putting $1,000 in on Friday was probably a good idea, or $1,500 was probably a good idea. If we fall another 2% on Monday, probably putting another $1,500 or $2,000 in is probably a good idea. If we fall again another 3% day on top of that, call it 10% down, throwing $3,500 in is probably a good idea. If you fall another 2% after that, throwing another $2,000 in is probably a good idea. If you fall to 20%, probably throwing all your money in the markets is probably a good idea at that point, right? Not a financial advisor, but that's based on history. you're going to have some good returns coming out of that. You want to set yourself up to win coming out of this, if you're not hedging at least. Now, if you're hedging, then you might want the markets to crash, something like that, but you still got to do some buying if you are an investor in this market. Now, if you're merely a trader, there's going to be different trading opportunities, but that's how I'm thinking about this market right now. You're not going to time the bottom down to the specific day, because Trump one day is going to come out in after hours, early in the morning, overnight, and cool everything off. And then, I mean, if you're down 10%, stocks could go up 6-7% in a day, right? Don't try to time the bottom with something like Trump. Now, in option activity on Friday for Tesla stock, you had 296 different trades totaling $167.5 million with a positive order value of 61%. So even though Friday was not a great day, you still had more positive than negative option activity. Now, short interest of free float did come down actually quite a bit. You had about 83 million shares sold short. Now you have 77 million shares sold short. So you've seen quite a bit of shorts covering in the last couple of days. Now here on the day today, you have 700,000 shares that were covered on as well on Friday. So short sellers were taking advantage of the drop in Tesla stock to lower some of their short exposure to the company. That is a pretty good sign that all hope is not lost. Now, there's not much news today. You can see this here. Cybercab lead engineer says on the Cybercab, it's so good and way better than it was a year ago as well, which is crazy because Cybercab was first unveiled a year ago today. I don't know about you guys, but it does not feel like it has been a year. But other than that, we don't really have any Tesla news to go over. There's actually not too much news in the broader markets as well today. So I wanted to take this time and explain kind of my thoughts around this, how I'm planning on navigating this market during another bout of what could be extreme volatility. Let me know what you are doing down below in the comment section. If you sold stocks, if you're hedged, if you're not hedged, if you're going to leg into positions, or how you are planning on executing on your strategy. Let us know down below in the comment section. Don't gatekeep that information from us. That should be a crime. Hit that like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of this video. If you want to come trade with us every time we make trades, come get involved in the group. That link is down below. Have a great rest of your day and weekend, and I will see you in the next one.